Scene script. Ever wondered what it would be like to earn money while you sleep? Welcome to the world of dividend investing. Imagine a magical realm where your money never sleeps. It's always up, always active, tirelessly working to increase your wealth. This is the enchanting universe of dividend investing, a place where your investments pay you regularly. Not just when you decide to sell, but even while you hold on to them. Dividend investing is like owning a golden goose. You invest in stocks of companies that pay regular dividends to their shareholders. These dividends are your golden eggs, your source of income that comes in addition to any potential growth in the value of the stocks themselves. Now you might be thinking, this sounds wonderful, but is it for me? Well, the beauty of dividend investing is that it's suitable for a wide range of investors. Whether you're just starting your investment journey or you're closer to the retirement finish line, dividend investing can bring a touch of magic to your financial strategy. Particularly for retirement planning, dividends can serve as a steady stream of income. It's like having a loyal butler who brings you a tray of cash on a regular basis. And who wouldn't want that? But remember, like any magic trick, dividend investing requires a careful balance. It's not about chasing the highest yield, but about finding stable and reliable companies that have a history of paying dividends. It's about strategic selection, patience, and the power of compounding. So, are you ready to make your money work harder for you? Buckle up as we guide you through the exciting journey of dividend investing. Choosing a dividend stock is like choosing a partner. You want them reliable, consistent, and, well, generous. Now, how do you spot this perfect match in the vast sea of stocks? Well, it's an art, my friends, and we're about to dive into it. Firstly, take a glance at the company's track record. You wouldn't marry someone without knowing their past, would you? Look for companies with a consistent history of paying dividends. This is a sign that they value their shareholders and are committed to sharing their success. Companies like Procter & Gamble, Lowe's, and Chevron have been wooing their investors with dividends for years. But past performance is not the only thing to consider. You also want to assess the company's financial stability. A company with a strong balance sheet, profitable operations, and a sustainable business model is more likely to keep those dividend checks coming. Now let's talk about metrics. Two key ones are dividend yield and dividend growth. Dividend yield is simply the annual dividend payment divided by the stock's price. It's like the interest rate on a savings account, but for stocks. However, don't be fooled by a high yield. It could be a sign of a struggling company and an impending dividend cut. Dividend growth, on the other hand, shows how much the dividend payment has grown over time. Companies that increase their dividends regularly are like partners who keep surprising you with gifts. It's a sign that the company is doing well and wants to share the wealth. But, and this is a big but, don't get dazzled by high dividend yields. If it seems too good to be true, it probably is. A high yield may be a sign of a company in distress, trying to attract investors. It's like a partner showering you with expensive gifts, but is always broke. You might enjoy the gifts, but you'll soon realize the situation is not sustainable. Remember, in the world of investing, not all that glitters is gold. High dividend yields may seem attractive, but could be a trap, so choose wisely. Making money from dividends is not just about picking the right stocks. It's about making the dividends work for you. It's time for some magic tricks. First, let's talk about building a dividend portfolio. This is not about putting all your eggs in one basket, but rather, it's about diversifying your investments across different sectors and companies that pay dividends. You see, by spreading your investments, you can cushion the impact of a single company's poor performance on your overall portfolio. It's like having a safety net made of cash. Next, let's talk about reinvesting dividends. Imagine a snowball rolling down a hill. As it rolls, it picks up more snow, growing larger and faster. That's exactly what happens when you reinvest your dividends. Instead of pocketing the cash you receive, you use it to buy more shares. This increases the amount of dividends you'll receive in the future. And voila! Your investment snowball keeps growing and growing. Now, if you're thinking, that sounds like a lot of work, don't worry, there's a simpler way to go about this. Investing in dividend-focused exchange-traded funds, or mutual funds, These funds pool money from many investors to buy a diversified portfolio of dividend-paying stocks. This way, you get to enjoy the benefits of dividend investing without the heavy lifting. It's like having a personal butler handling your investments, and who wouldn't want that? But remember, no matter which strategy you choose, patience is key. Dividend investing is a long-term game. It's like planting a tree. You don't plant a seed today and expect a full-grown tree tomorrow, do you? It's the same with dividends. It takes time for your investments to grow and bear fruit. And speaking of growth, let's not forget the magic of compounding. When you reinvest your dividends, you're not just growing your investment, you're supercharging it. With each reinvestment, you're increasing the number of shares you own, which increases your future dividends, which you reinvest to buy even more shares, and the cycle continues. It's like a magic money-making cycle. As Albert Einstein once said, compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it. So, let's make the wonder work for us. Now you're armed with the knowledge, you're ready to embark on your dividend investing journey, but remember, Rome wasn't built in a day. Let's break down your first steps into this exciting realm. Step 1, do your research. Websites like The Motley Fool and Forbes have a wealth of information on dividend investing. Look for companies with a history of stable and growing dividends. Compare dividend yields within the same industry. Step 2, start small. There's no need to pour all your savings into one stock. Begin with a manageable amount that you're comfortable with. Step 3, gradually build your portfolio. As you get more comfortable, you can start to diversify, adding more stocks and perhaps venturing into dividend-focused ETFs or mutual funds. Remember, this is a marathon, not a sprint. Lastly, don't forget that dividend investing is a long-term strategy. It's like planting a tree. You water it, nurture it, and over time it starts to bear fruit. But it doesn't happen overnight, so patience, young investor, patience. So, are you ready to dive into the world of dividend investing? Remember, the journey of 1,000 miles begins with a single step. And don't forget to subscribe to Mystical Money Making channel for more exciting investment insights.